We'll move on to talk about individual stocks. Now, CLSA has raised the target price for a lot of power companies. They say India's regulated utilities offer defensive growth at attractive multiples. Vivek joins in with more. Vivek.
Well, that's right. A very interesting note coming in from CLSA today on the entire power pack. So what have they done? Remember, across the power space, they have ratings and they have coverage across 6. And out of which, apart from Tata Power and JSW Energy, they are quite positive on the rest of the names. So NTPC, NHPC, Power Grid, CERC, all of these names have gone ahead and upgraded their target price, further reiterating their positive stance. Now, why are they positive, especially on regulated utilities? Like you mentioned, they offer defensive growth at attractive multiples with net zero option value. Along with that, what they're saying is that collapse as far as the Chinese polysilicon prices, which will make wafers more cheaper, is something they expect to go ahead and kickstart renewable energy capacity addition from the second half of FY25. So what are the key catalysts as far as the entire power space is concerned according to CLSA? Number one, CERC's FY24 to FY29 regulations are quite positive for thermal utilities, especially as they go ahead and increase the ROE. Along with that, there are incentives that come in case certain obligations are met and certain measurements are actually gone ahead and exceeded by the power companies. Along with that, power demand is expected to remain quite strong. FY24 power demand was almost 7.6% year-on-year growth. Along with that, India has gone ahead and started execution as far as thermal capacity. Remember, almost 80 gigawatt of thermal capacity will be added, and along with that 500 gigawatt non-fossil fuel capacity addition too over a longer period of time, something that India has started working upon. Lastly, which are the key things to monitor as per CLSA? Number one, policy changes to go ahead and support the Make in India solar power projects, along with that execution of reform links funding of DISCOMs. So as whenever DISCOMs go ahead and start improving performance, that they believe will be a key kicker, and along with that they expect double-digit EPS growth and expanding ROEs as well as increasing dividends. They believe this will also go ahead and support stock prices.
Okay, got that. Vivek, just recap the stocks for us. What are their top ideas, top buys? What do they like the most in the sector?
Well, what they like the most are all of the regulated utilities. So number one, NTPC, they have a buy rating there, target raised to 441. Earlier target price was close to the current market price of around 375. NHPC, they've been bulls over here. NHPC as well as LJV, they've been bulls for quite some time. NHPC, they've gone ahead and upgraded their target price further to 120 from 81. Power Grid, they have an outperform rating that increased the target price to 285, to 342 from 285. CSE, they've increased the target price close to 180 rupees. Tata Power, while they have a sell rating, they've increased the target price. Tata Power is something where the price move have been against their call. And JSW Energy, they've increased the target price to 285. Here too, a little behind the curve because the current price is actually quite significantly higher.
Yeah, everything and anything has sort of rallied in the power sector, absolutely. So I think some of the stocks, I guess, CLSA is still bullish on. Thank you for that, Vivek. We do have to take a very quick break on that note. Come back on the other side and we'll get chatting with the management of South Indian Bank. The bank came out with the fourth quarter performance, so we'll analyze the numbers.